Good day and a warm welcome to day 2 of our virtual Candy User Seminar. I am Evilio de Abreu, Head of Customer Success based out of our Pretoria office in South Africa. We would like to thank you, our Candy users from all over the world, for joining this seminar series on how to step up your Candy game by applying the 3 principles of effective cost control. Yesterday, Wasim covered establishing a good baseline. Today is day 2 of our 3-day seminar series, and we will be unpacking the principle of effective cost control. That is our second principle, knowing the current status of a project. Tomorrow, we will end off with our third principle, which is knowing where the project is heading. If you missed yesterday's session, or if you haven't registered for tomorrow, please follow the QR code on screen to book your virtual seat. Even if you can't attend the live event, please still register because you will receive a link to view the recordings. Due to the time constraints, we won't be able to answer any questions while the event is running. But please use the question function on screen and a consultant in your region will get back to you after the 3-day seminar series. We also have a feedback form at the end of the session for you to post your comments. And by doing so, you have access to the promotion on offer. Today, we have Jaya Kishan, Gopinathan Pillai presenting our second principle of effective cost control. Jay is a senior technical consultant from our Dubai office. He is a civil engineer with a postgraduate in quantity surveying from the Heriot-Watt University. He also is a certified cost professional. He started his career as a quantity surveyor in 2004 and has 18 years of construction industry experience. He has been part of the RIB team since 2013 and has been assisting the construction companies across MENA region for the past 9 years to utilize Candy effectively to enhance their profitability. Jay is also a sports enthusiast who loves playing football and cricket. Over to you, Jay.
Thank you, Evilio. Good day, everyone. Greetings from RIB CCS Gulf office in Dubai. It's our pleasure to present this session to you. During our first session yesterday, we have seen how the budget can be finalized in Candy and original base forecast established. Today, we will go further to the post-tender stage or the execution stage and see how the progress related information can be updated to see the allowable to date or earned value. Establishing allowable to date or earned value is achieved by doing valuations. RICS defines valuations as the process by which QS arrives at the value. It normally involves visiting site and checking that the work is carried out by visual inspection or measurement from site or drawings. Valuations can be external or internal. External valuations are the payment application to the client whereas internal valuations can be used for cost control to reconcile the value with cost using either CVR or earned value methodologies of cost control. In this session today, we will primarily focus on getting the progress quantities updated and using it for internal cost control purpose using the earned value methodology. So let's get started. Further to establishing baseline, as we record the progress quantity on a periodic basis, Canty will generate the allowable for that period. Suppose we are on May of this year for this project. The planned value for this period is 80 million. Now, when we update the progress, Canty will tell us the earned value. In this case, it is 100 million. Oh, that's actually good. We planned for 80 but achieved 100, which means that we are ahead of schedule. This gives us the first variance, which is schedule variance, and the schedule performance index or SPI. Schedule variance is the difference between earned value and planned value, that is 100 million minus 80 million. And schedule performance index is the ratio of earned by planned, which is 100 by 80, which is 1.25. And SPI greater than 1 indicates that we are ahead of the schedule. Looks interesting, isn't it? During today's session, we will see how we can update the progress to generate the earned value and compare against the planned value or the base forecast, as well as generate the performance KPIs such as schedule variance and the schedule performance index. We'll also look at remaining and allowable at completion. International Journal of Innovation Management and Technology published a journal in April 2017 which stated that 9 out of 10 projects in construction industry experience cost overrun for various reasons. One key element for any project management is monitoring and control of the plan and its execution. In 2021, KPMG did a survey and asked construction professionals, does your organization consistently monitor, track, and report on actual benefits realized in projects against the cost and program? Interestingly, 58% of the respondents from engineering or construction firms mentioned that they do monitor it always, but 30% said they do only sometimes, and 12% never did it or didn't even know about it. So, about 42% don't do it regularly, and that is a fact to be addressed. A famous quote by Peter Drucker says, "You can't manage what you don't measure." So today we will see how we can measure the allowable to date. So we'll see how the valuation can be done in Canty, the progress quantities be updated, the different options for it. We'll also look at the cost and allowable module where we see the allowable to date, then see the schedule variance. We'll also see some reports, and finally we will also see how the next valuation can be set up for the next period. The best practice is to copy the budget file for updating the first valuation and to do the same subsequently for each period. So to start off, we will copy the budget file and rename it as valuation number 1. Within the valuation module, whenever we set up the valuation or when we enter for the first time and we click on any menu, the initial setup window will pop up and we can choose the valuation date and update the valuation number and title. Please note that the valuation date will automatically populate if you set up the financial calendar earlier. Else, we can manually choose the valuation date. In the valuation bill, we will have different quantities. The first one being the actual quantity, in addition to the bill quantity and the final quantity. The bill quantity and final quantity we have covered during the first session. So today we will start with the actual quantity. The to-date actual quantity is the cumulative quantity of work done till this period. The claim quantity is the quantity claimed to the client as part of the interim payment claim or the payment application, which is the quantity used for external valuation. The paid quantity is the quantity used by the client to calculate the payment to date or the certified quantity for the period. Valuation quantity default order setting can be chosen as required in order to get the quantities reflected from others. For example, we can choose the option that when actual quantity is entered, it will get automatically reflected in the claim quantity, and subsequently the claim quantity will get reflected to the paid quantity. The user can also manually update each of these quantities as required. Now we look at the methods of updating actual quantity. We'll go through it one by one. The first option is the manual entry in the to-date actual quantity column. The QS can enter the cumulative actual quantity directly in the to-date actual quantity column. We can also enter the month's actual quantity by customizing, adding the month's quantity column into the document. And this month's quantity column is also available for actual, claimed and paid quantities. Next is the manual entry as a percentage of bill or percentage of final quantity. Alternatively, QS can enter the actual progress as percentage of either the bill quantity or the final quantity column. And as you can see, when percentage is entered, the actual quantity to date is calculated and also vice versa. Also note that based on the valuation quantity order setting, the claimed quantity and paid quantity will get updated. This contract is a remeasurable contract, so we can claim till the final quantity. But for a lump sum contract, we can only claim till the bill quantity, even though we have to complete the final quantity. So this will have to be considered when choosing the valuation quantity order setting. Next is the actual quantity update from Quantity Takeoff tool. Another option available is to use the Quantity Takeoff tool in Candy to measure the actual quantity. Using the Quantity Takeoff tool, we can measure either the bill, actual, claimed or final quantities. For allowable to date, we will use the actual quantity. The details of the measure done can be seen by opening the takeoff sheet, by clicking on the link to BOQ icon, or by right click on the measurement markup. The measured quantity can then be linked to the bill item directly from the takeoff sheet. Once the quantity is transferred to the bill, the details of actual quantity measured using Quantity Takeoff tool is available in Valuation Document 2.7 QTO Bill of Quantities for easy cross-reference. The QTO actual quantity can then be copied to the to-date actual quantity column. Next, valuation quantity tools using import from Excel. Export or import valuation quantities option is available under valuation quantity tools and can be used to import quantities updated in Excel by site team. This option can also be used to update the final quantity from Excel. Next, we'll see update valuation from planning progress. As a best practice, we can duplicate the existing link program and name it as Progress Update 1. The progress in program can be updated in the progress bar chart documents available in both in the planning module or the link and forecast module. The time now recorded in the planning should be same as the valuation date. Progress can be updated in the program against activities by entering the start date and finish date or the remaining duration. The progress can also be updated using the mouse and pulling the thread against the activity bar. Alternatively, progress can be also updated using the right-click menu, using options like update as predicted, etc. The speaking progress document will show you the progress ended against activity. In this job, the planning progress update records 60% progress for clear sight. The progress entered in the program by the planner can be then compared with the progress updated in the valuations by the QS in the document number 6.3 in the link and forecast module. The progress entered in the program by the planner can also be copied to the valuation bill if needed, using the update valuation from program option available under tools in this document. The progress entered in the program by the planner can then be compared with the progress updated in the valuations by the QS. In this example, we are updated in the program that the work was done as planned. However, the actual progress measured by the QS was more than that. That is, the activity is ahead of the schedule. If we decide to go with the QS quantity updated in the valuation, then we must spread the difference in remaining quantities to the activities by clicking on spread valuation quantity over remaining quantity. For example, in this case of site clearance, the plan was to do 3,600 square meters in the first month and the forecast is based on that. But we completed 6,000 square meters in the first month itself. So the forecast for the remaining month should be made 0 since the activity is complete and the remaining quantity is 0. If we decide to go with the QS quantity updated in the valuation, then we must spread the difference in the remaining quantities to the activities by clicking on spread valuation quantity over remaining quantity. For example, in this case, site clearance, the plan was to do 3,600 square meter, but we have actually done 6,000 square meters. So the remaining quantity is 0. We also have to sort out the final quantity and remaining quantity differences for the forecast by importing the forecast from the updated program with progress. When these steps are done, the forecast and the valuation progress will be in sync. Another option for updating the progress quantities is to update the progress information from all the packages in the subcontract manager module of Candy. The subcontract manager is used at post-tender to handle the project's subcontractors. The subcontract manager contains subcontractor bills which are created using items from the main BOQ. Multiple subcontractors can work on one main BOQ item, either on supply and installation rates or labor-only rates. Subcontractor details can be entered or picked from the subcontractor database. Each subcontractor has a bill with award rates and awarded quantities. Subcontractor awarded rates can be compared with our budgeted rates in order to investigate better buying options. Progress is recorded in the subcontractor bill and used to create subcontractor payment certificate and may also be used to update the quantities in the main BOQ. Against the subcontractor, in addition to the awarded quantity, we have invoice quantity, due quantity and pay quantity. Ideally, due quantity of the subcontractor is the actual quantity for main contractor's valuation. Extras, contra charges, inter-subcontract charges, etc. can be recorded for each subcontractor and included in the subcontractor's payment certificate. Material on site claimed by the subcontractor can also be captured per month. Only the entries for the current period are regarded for this period certificate. When the next certificate is made, the previous certificate entries will be displayed in grey text and cannot be amended. Material on site will be reversed during next month automatically. All previous and current certificate are listed in the certificate tab. All the information shown on this screen can be edited to reflect the progress of the payment to the subcontractor. However, the certificate number cannot be changed as it reflects the sequence of certificate and is cemented automatically when the next certificate is set up. The value tab will give you a summary of the subcontractor's values. When a subcontract certificate is made, CANTI data is stored into a copy of the template at the cell specified. You may need different templates for labor only, domestic subcontractors, etc. The templates are designed by the user and must contain formula that is required to total and subtotal, add value additive tax or VAT, etc. You need to specify which cells in the spreadsheet to write the specific data from CANTI. Each subcontract must specify a template to use when making its certificate. The valuation subcontractor due quantities accumulate to the subcontractor's total due quantities in the main bill, which can be copied to the main bill's actual quantity column. Similarly, this other packages can be progressed and the payment certificate can be generated. A summary of all the subcontractors can be viewed in the subcontractor liability document. The liability document displays all the subcontractors' bill values. The progress updated in the subcontract manager can then be copied to the to-date actual quantity column of the main contractor, which will avoid double work. That is, the progress needed to be updated only in the subcontract manager and then be copied back to the valuation bill, or even vice versa can also be done. Next, we will look at the cost and allowable to see the allowable to date, remaining and the allowable at completion. Now, having seen the options to update the actual quantity to date, which generates the allowable to date, let's check out how the allowable amounts can be viewed. From the cost and allowable module of CANTI, we can open up the document number 1.1, cost and allowable by period, to view the allowable to date, which in this example is 73,928. As you are aware, the allowable to date is calculated based on actual quantity multiplied by the net rate or the budgeted rate. Another view of the same information is possible by using the document number 1.2, cost and allowable by type, which shows the allowable amounts for each period together, that is to date, remaining and at completion. While the allowable to date is based on the actual quantity multiplied by the net rate, the allowable remaining is based on the remaining quantity multiplied by the net rate. The remaining quantity is the difference between the final quantity and actual quantity. That is, final quantity is the total quantity of work to be done. Actual quantity is how much is already completed, and the difference is of course the remaining quantity of work to be done. The at completion allowable is based on final quantity multiplied by the net rate, which will also be same as the to date allowable plus remaining allowable. Next, we look at the earned value graph and see how we can generate the schedule variance and the schedule performance index. The allowable today generated can be compared with the planned value using the earned value functionality in Candy's cost and allowable module. In the cost and allowable module, we can set the terminology that you would like to see. That is, either the cost and allowable terminology or the earned value terminology can be chosen. In the cost and allowable terminology, we have current base and allowable. Whereas in the earned value terminology, we have planned value and earned value. Another component that we can see in the earned value management concept is the schedule variance and the schedule performance index. When the planned value gives the information from the baseline which was set up on what was planned for, the earned value, also known as the budgeted cost of work performed or BCWP, gives how much value we have achieved based on the progress updated in the valuation module. The difference between the earned value and the planned value is the schedule variance, and the ratio of the earned value and planned value gives the schedule performance index or SPI. The SPI is an indicator of the performance of the project in terms of the schedule, and SPI greater than 1 indicates that the project is ahead of schedule. In this example, let's focus on valuation 1. Here we have planned for work worth 60,376, but actually has done work worth of 73,928. So the schedule variance is 73,928 minus 63,376, which is earned minus planned, which is 10,552, which is positive. Now the SPI is 73,928 divided by 63,376, giving 1.17, indicating that we are ahead of the schedule. On the other hand, if the SPI is less than 1, it indicates that the project is running behind schedule. The next component to be considered here is the actual cost incurred, which will be discussed during the third session of the seminar tomorrow. Now, having seen the concept using the documents in Candy, we can generate some good reports as well. These are some reports that we'll see today from the Valuations Report Manager. These are some of the reports that we can see from both valuations and the cost and allowable report manager, and we'll also see some reports from the subcontractor manager section. In the valuation reports, we will first see a report that shows the valuation selling bill based on claim quantity, which is a document for external valuations. In the valuation selling bill report, we can customize to add the previous, this month and cumulative claim quantity and the selling rate for submitting the payment application to the client. The report can be generated by showing the bill items with progress and with summary as required. We can generate the similar reports with net rates showing bill, actual and final quantities, which is for internal valuation, for knowing the budget for the month or allowable to date. This will give us the total budget based on the final quantity and also allowable budget based on the actual quantity. Same report can be generated with only the summary showing the required section headings of the bill. Valuation report can also be generated with bill items grouped to codes like trade or task codes. This report can also be generated with only summary based on the trade or the task code. In this report, same information of allowable amount is generated with task code wise summary. If you see this report, the same information allowable amount is generated with trade wise summary showing 73,928 for earthworks trade. From the valuation module, we can also generate certain cost and allowable based report. For example, the allowable summary. Allowable summary report summarize the job into task code and cost code and then shows the allowable for each of the 3 periods: to date, remaining, and at completion. Quantity summary reports summarize the job into task code and cost code and then shows the quantities based on bill, actual, remaining, and final quantities. The cost and allowable by type report generates the allowable for each of the 3 periods, but also has the columns for the cost and variances. Resource utilization reports can also be generated based on the actual, remaining, and final quantities. As you can see, for the unskilled labor with resource code of 2211, the allowable usage based on the actual quantity is 40 days. The remaining allowable is 8,534 days and the total allowable is 8,574 days. The report can also be generated for all resources or customized to include specific resource type, for example, materials. As you can see, the allowable to date usage for diesel is 2,400 liters and the remaining allowable is 41,925 liters and the total allowable is 44,325 liters. Like we have seen for the bill, we can also break down the resource usages to project code level for more detailed analysis. In the previous report, we saw that the allowable usage for diesel is 2,400 liters. Now, this report further breaks down that 2,400 liters into 880 liters allowed for the task of clear site and 15,520 liters for the task of excavation. So quite detailed and quick analysis of the allowable, is it not? We can also generate a very high level summary of the resource allowable to trade and resource type. So this shows the breakdown of the resource type split for the trade of earthworks, showing up the breakdown of 73,928 into 12,652 for labor, 39,671 for plant, 21,604 for material, etc. Resource percentage report based on actual quantity is a good report to understand the major resources utilized for this period. As you can see, 2,400 liters allowance of diesel contributes to 29.22% of the total to date allowable. Value analysis report based on actual quantity is another good report to understand the major bill items or price codes progress till this period and is sorted in the descending order of the value. As you can see, the bulk excavation contributes to 64.32% of the total to date allowable and site clearance contributes to 35.68% of the to date allowable. Value analysis report can also be generated based on the remaining quantity, which is another good report to understand the major remaining bill items or price codes sorted in the descending order of the value. As you can see, the major remaining item is the concrete in foundations, which constitute to 31.29% of the total remaining amount. So let's be prepared for it. Another useful summary is the trade total based on actual quantity. In this example, we only progressed the earthworks trade in the first month. The trade total based on actual quantity can also be generated directly from the trade total graph. As you can see, 54% of the allowable is made up of plant, 29% is for the material, and 17% is for the labor. Subcontract payment report can also be generated from valuations or the subcontract manager. We can customize this report and see only the required packages. The subcontract manager module also has useful reports like bill with subcontractor progress. Bill with subcontractor progress report will show the bill items with the packages allocated and the progress quantities for each package. The subcontract summary report will show the summary against each package. The summary will also show the liability amount for each package. This brings us to the end of the report section. So we have seen how the actual quantities can be updated and then generate the allowable to date for the earned value analysis. We have also seen how the information updated as progress can be used to generate multiple reports very easily. It's all about taking control of the job, effectively utilizing the tools available. As I mentioned initially, monitoring and control is the key for managing a project. The tools that we explained helps to measure and take control of the project and most importantly, achieve the targeted profit levels. Before we close, we will also quickly mention about the setup to be done for the next month. Even though this is done only after doing the cost import, we are just showing this here to understand the process of setting up next valuation. We can duplicate the valuation 1 job and rename it as the valuation number 2. We can set up the next valuation under the valuation setup manager. During the setup for the next month, the last month's values will get automatically copied to the previous period. And this can be done on each period. I would like to conclude with this thought-provoking quote. It doesn't matter how many resources we have. If we don't know how to use them, it will never be enough. So true, isn't it? And it applies to all. So friends, let's utilize the tools to sharpen our skills and achieve success. So today we have seen how the allowable to date, allowable remaining and allowable at completion is calculated in CANTI. The next factor that we must consider is how much did we spend? What is the actual cost to date? This will be the focus for tomorrow's session. We'll also see how CANTI predicts the remaining cost using the cost rate feature, which is one of my personal favorite features when I wear the QS hat. So do attend the session tomorrow where we will complete the full cycle of earned value management. Thank you for all your support and patience. Do contact the local RIBCCS offices if you need any further details. With this, I will hand over the stage to our program director. Over to you, Velio. Thank you.
Thank you, Jayakishan. We have come to the end of the second day of our virtual seminar series. We trust you enjoyed the session today on our second principle of effective cost control. If you haven't registered for tomorrow, please follow the QR code on screen to book your virtual seat. Don't forget to fill in the feedback form to take advantage of our seminar promotions. You're welcome to leave any questions or comments. Thank you and goodbye for now.